I have analyzed many stocks over the years. I talked about HIMS early on. I talked about Robinhood, talked about SoFi, talked about many growth stocks, but I have to admit, AST Spacemobile is by far one of the most interesting growth kind of stocks that I've seen in a long time. I mean, the stock could have up to 10x potential, a little bit more than 10x if it does work out. If it doesn't work out, the stock could go down 50 or 70%. So there's a lot of asymmetry where the upside is pretty much to the stratosphere, like insane total addressable market if it does work out. But if it doesn't work out, then you could lose whatever you put in. So to me, I really like such bets because I can put a small percentage of my portfolio. If they do work out, I 10x my money, 15x. If they don't work out, then I don't lose too much. And that's how I think about them. But for AST Spacemobile, it's a very interesting project because it's a pre-revenue company. It's going to start making revenues in the second half of 2025. But based on my understanding, and I'm not an expert, they are mainly trying to replace whatever towers, like cellular towers, you see on the road. You see many of those giant towers, maybe by American Tower or other kind of towers, but it's mainly American Tower. They are trying to replace this old infrastructure through the first and only space-based cellular broadband network. It's going to have coverage all over the earth. Pretty much everywhere you are, you will have coverage. And it's going to be amazing if it does work out as planned. And they do launch satellites, through space. And those satellites, they act like a tower that you see on the road, but then they cover much more space. And you could pretty much cover the entire face of the earth with those satellites. And it's pretty amazing. Now, what makes this company special is they have a massive total addressable market of over 5.6 billion phones. 5.6 billion phones is their total addressable market, or up to $1.1 trillion in terms of wireless services every single year. It's 1.1 trillion or 5.6 billion phones. Now, the best part about it is the company doesn't have to spend a lot of money advertising to those $5.6 billion phones because the company has investments and partnerships through many legacy cellular, or you could say, communication kind of companies. For example, 3.7% of the company is owned by Alphabet, by Google. 2.6% is owned by AT&T. 1% is owned by American Tower. And they have partnerships with many different legacy players, AT&T, Verizon, Google, Rakuten, Vodafone, which is huge, and American Tower. That's going to give them access to over 3 billion subscribers. So they don't even have to spend money trying to advertise AST Mobile. They already have the partnership with all those partners, and many of those partners are invested in AST Spacemobile. So it's going to be a beautiful business model once it rolls out. It is CapEx heavy right now, but once they have those satellites in the air, then it's going to be very, very profitable subscription, recurring revenue business model. But I just want to highlight some of their partnerships. One of them was Vodafone, which is huge in Europe. This is an insane partnership. And Vodafone alone has 330 million customers across 15 countries. This is insane kind of scale in those partnerships. And this is what I believe is going to look like. That's what they're showing it, where Spacemobile starts as like a second option, where it would ask you, you are out of your coverage zone. Would you like to turn on your Spacemobile Day Pass? Then you click yes, and then you're connected to Spacemobile on a pay-to-connect kind of subscription. Then I believe it's ultimately going to be a full subscription kind of thing where the company will benefit not just on pay day passes, but it's going to benefit every single month. And I'm not experienced in this sector, but I've been trying to study it. Now, the company has 95% vertically integrated manufacturing. So they manufacture their own stuff in Texas. They have control over their supply chains. They have control over their product, over how everything is made. And they're very good at what they make. Now, the story sounds amazing, but they do have a lot of challenges. Now, for them to have non-continuous connectivity services in the United States, they need around 25 satellites. Now, they said while 45 to 60 satellites would be needed for continuous coverage across the US, Europe, and Japan, so they still have to launch up to 60 satellites in total for them to pretty much run their business model. Now, they were launching those satellites and it was costing them 19 million to 21 million. But because of the tariffs and other things that have happened recently, it's going to cost them 21 million to 23 million dollars. Okay? Now we're going to do some calculations. If you remember, they have to launch up to 60 satellites for them to have full continuous coverage in the United States, Europe, and Japan. And it's going to cost them around $21 million. So we get $21 million and we time it by 60. So in total, they're going to need, or we could even use 23 million to use the best, kind of the high end. So 23 million times 60. In total, they're going to need almost $1.4 billion for them to be able to launch those satellites, $1.4 billion. The company right now has $874 million in cash, so they would still need around $400 or $500 million in total for them to be able to launch those satellites, which means there will likely be more dilution coming. The company that wasn't making money, it's still not making money, so they had to dilute massive amounts of stock for them to raise capital and for them to be able to deploy those satellites, and they are working on it in real time. And once they do, again, this is the CapEx heavy part. Once this is done, once the satellites are in space and everything is working properly, it's going to be a very smooth, very capital light, recurring revenue business model. I mean, it's just going to be so profitable. It's insane. And here we are at the late stages of their dilution. They might need to dilute one or two more times, but it's not going to be anything crazy, as they have most of what they need for them to be able to fund those satellites. And the company is going to finally be making money in the second half of 2025. And it's not just from them rolling out those satellites, but they did win some key government contracts in the United States and with other kind of companies, with Department of Defense, of course. And that's going to be amazing. And now, especially if we have a lot of things happening in the White House between, Elon Musk and the president, and a lot of people on X, they said that this company could massively benefit as there will be more competition with SpaceX and they will diversify their partnerships instead of relying on one partner for everything. So that's also going to be another catalyst for ASTS government contracts, which not a lot of people are talking about. Now, if we look at the valuation of the company, and it's very hard to estimate their sales, but it's trading around 86 times forward sales. 86 times is nuts. It's absolutely insane. I've never thought I would consider paying 86 times sales for any company. I mean, I bought HEMS, it was like 2.8 times sales, and other kind of companies, I never paid more than 5 times sales for pretty much any growth company. This one is trading at 86 times sales. I mean, you just feel ripped off, but you have to understand the potential here. And the potential is over 5.4 billion phones. The TAM is over $1 trillion. So there's massive sales growth that's going to be happening over the coming years. And Deutsche Bank, they did a lot of research on this one, and they put up their estimates for AST Spacemobile based on the total satellites and everything they have. And they expect the company to be free cash flow positive by 2027, and by 2030, they expect $5.2 billion, from $62 million to $5.2 billion in sales, and that would be like a 5% market share out of $1 trillion industry. So we're talking about so much potential beyond the $5.2 billion. So if I look at it over here, $5.2 billion, assuming the company goes from 86 times sales to 10 times sales. Now, 10 times sales is still a ripoff, I'm just being honest. But if this is a promising company with such bright future, it will likely trade between 5 to 10 times sales, if I had to guess, if not 20 times sales, you never know. Now, if it does trade at 10 times sales, and if they do reach $5.2 billion, this is a $52 billion market cap. The current market cap right now is around $11 billion. So this is like a 4x or 5x over the next 5 years, despite AST Spacemobile being up this year around 60%. So to me, I'm looking at the potential. I'm seeing almost a 4 or 5x over the next 5 years if it does work out. If it doesn't work out or something happens with the satellites that doesn't go as planned, some major issues happen, which is unlikely because you have many, again, bright companies like Vodafone and many other companies that invested in this company. So they're seeing something in it. And especially Alphabet is putting money in it. So those kind of managers are not dumb. And if you're invested in AST, you're pretty much following Alphabet and following many different companies. But if they do have any kind of challenges, then yes, the stock could go down 50%. So like you could pretty much lose your investment. But if it does work out, I'm seeing 4 to 5x over the next 5 years, maybe 10, 20x over the next 10 years is very possible. So I'm seeing massive asymmetry here where the upside is unlimited, so downside is limited to how much you put in. So for me personally, I'm looking at AST, I'm still researching the company, but to me, it looks very, very interesting setup. And even if it's 86 times as a traditional value investor, I don't really pay 86 times, but if you look at how much those sales are going to grow, it's not really trading at 86 times. It's maybe trading at like 2 or 3 times sales for their 2029, 2030, once they launch the satellites and once the company starts becoming profitable. And as they launch the satellites, this is the capex heavy part. After that, it's going to be a smooth, capital light, recurring revenue business model, and this is going to be the future, and they have very little competition. So for me, I'm liking ASTS. I hope they dilute some stock for me to be able to get a position, maybe in the low $20 or something close to $20. But I share everything I do in real time, when I buy something, when I sell something. It's all in my investment group. This is the link if you're interested. But thank you very much for watching. Not financial advice. I hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.